Okay, so we are doing admission of a partner, right? What we completed so far? We completed calculation of new profit sharing ratio. We completed calculation of sacrifice ratio, right? Then we completed treatment related to accumulated profit, loss, and reserves, right? Then we completed goodwill adjustment as well, right? Then we completed revaluation account. What is revaluation account? How to prepare that, right? What are the journal entries that we're supposed to pass, right? So now we are going to see the question which will be comprising of all these things, right? We are going to solve questions where you will be finding all the concept that we covered so far. Getting Sadhna, Shivarish? So see this question.
The doubt is that you want to short summary of
See this question. The following is the balance sheet of Ram and Mohan, who share the profits in the ratio of 3:2 as on 1st of January 2022. Right. So there are two partners, Ram and Mohan, and they have given us their balance sheet as on 1st of January 2022. Right. So I can say their year end is 31st of December 2021. Right. The next date is 1st of January 2022. So 1st of January 2022 and 31st of December 2021 is one and the same only, I can say. Right. So balance sheet is given to me. Below balance sheet, so there are some adjustments are provided. So what are those adjustments? On this date, Sham was admitted on the following conditions. So new partner Sham is coming into the business, and following are the adjustments provided. He is to pay 25,000 as a capital and 10,000 as his share of goodwill for 1/5 share in the profit. So Sham is going to be admitted into the partnership from business for 1/5 share in the future profit, right? He will be going to enjoy 1/5 share in the future profit, and for this 1/5 share in the future profit, he is going to contribute capital of rupees how much? Capital of rupees 25,000 and 25,000 rupees of capital and 10,000 rupees of goodwill. He is going to brought in 10,000 rupees for a goodwill and 25,000 rupees of capital, right? The new profit sharing ratio is already given to me. So whenever new profit sharing ratio is given, then how to calculate sacrifice ratio, we know that, right? We have to calculate sacrifice ratio only for goodwill adjustment, right? So we'll be doing that. After that, so value of assets to be revalued as under. So current value, today's value of the assets and liabilities are provided to me, right? So with the help of that, I can prepare what? I can prepare revaluation account, and I can pass journal entry too, right? Then, so it was found that there was a liability of rupees 1,500 for goods received but not recorded in books. So it means unrecorded liability. You purchase 1,500 rupees of goods, right? But you haven't recorded that in the books of accounts. So it is nothing but this 1,500 rupees you have to pay, right? So it's an unrecorded liability. So that unrecorded liability I will be going to record, right? And I will be passing journal entry, or I can say the accounting for the same. What they are expecting from us: give a journal entries to record the above, also give the balance sheet of the partnership firm after Sham's admission. So here, what they are expecting from me is, to prepare journal entry, right? And then they are expecting to prepare what? They are expecting to prepare balance sheet as well, right? So what I will be going to do, no doubt I will be passing journal entries, right? After passing journal entries, sir, there is need to have a revaluation account, because when we close down the revaluation account, we get the balance on the debit side or credit side, that is profit and loss, right? And then we distributed among the partners, among the old partners as per their old profit sharing ratio, right? So what I need to do, even they ask me to pass journal entry, yes, I will be going to pass journal entry, right? The main answer is passing journal entries and preparation of the balance sheet. But apart from this, sir, what I need to do? So apart from this, I supposed to first of all calculate sacrifice ratio, right? Then I need to calculate what? Yes, tell me. I need to calculate sacrifice ratio. I need to prepare revaluation, right? If needed, I will be preparing capital account as well if needed. right? And if needed, I will be preparing cash or bank account as well. So what I'm saying, this requirement, um, preparation of this capital account and cash and bank account is not mandatory. It's depend upon question, or is depend upon the requirement, whether we have to find out capital, or if we are not able to calculate capital directly, then we can prepare capital account. If we are unable to find out what is closing bank balance, cash balance, then we have to prepare account. But calculation of the sacrifice ratio and revaluation account is must. We have to do this. It's compulsory, right? We have to do this. So this will be the working note part for me, and this will be the answer part, right? So I will be discussing one by one what we have to do. See, first of all, whenever admission of a partner question is in front of you, first of all, you have to calculate what? You have to calculate sacrifice ratio. This is the first thing you have to do, right? So here, new profit sharing ratio is available and old profit sharing ratio is also available. So I can calculate sacrifice ratio. Tell me, Sadhna. Yes, Parth, Shivari, which formula I need to use? Share sacrifice is equal to old share minus new share. So I need to calculate sacrifice ratio for Ram and Mohan, right? So Ram sacrifices how much? Old share was 3:2, 3/5.
Yes.
And for Mohan, it's 2/5. Right now, 3:2 means 3/5 and 2/5 now. Right, Sadhna?
Yes, sir.
Minus new share. New share is 5:3:2. So it means 5/10 now.
Yes, sir.
Yes. Minus 5/10, and here minus
3/10.
3/10. Right. So after solving this, what answer I will be getting? I can solve this by LCM. Six minus 5, 1, right? 1/10. Here also 1/10. So I can say sacrifice ratio is 1:1. Getting? Shivarish? Sadhana, Shivarish, Pathsarthi?
Yes, sir.
Okay, so sacrifice ratio is 1:1. Okay, after that, what we have to do, sir? So after that, yes, after that I need to first focus on balance sheet, which is given to me, right? See, in balance sheet, they have given me Ram capital and Mohan capital. See, they have not asked me to prepare capital account. But if I supposed to prepare here, if I would be preparing capital account, I will be writing this on the credit side of capital account, right? By balance brought down. By balance brought down 20,000 for Ram and 25,000 for Mohan, right? Okay, apart from that, sir, there is no profit and loss, there is no reserves and surplus. Is it given here? No, sir, there is no profit and loss, there is no reserves and surplus. Okay, so under balance sheet asset side also, there is no profit and loss account balance over here, right? If they have provided us balance on the reserves and surplus and profit and loss account balance on the liability side or on the asset side, then we have to transfer that towards old partners capital account, if you remember, right? So, but it is not given. Okay, so I will be skipping this now, balance sheet, right? From the balance sheet, what we have to check? From balance sheet, I need to post down opening balances, opening capital balances I need to check. And secondly, from balance sheet, I need to transfer profit and loss and reserves and surplus balances, right? These two things I need to pick up from the balance sheet, right? So in this particular question, sir, reserves and surplus, profit and loss account balance is not provided in the balance sheet, right? And opening capital balances. So opening capital balances are given 20,000 and 25,000. So here I am not going to prepare capital account because that is not requirement here, right? So I can skip that. Okay, now I need to read adjustment one by one, and I need to pass the journal entry. So help me in passing journal entry. Everyone, see, what is the first adjustment, Sadhna? He is to pay 25,000 as his capital and 10,000 as his share of goodwill for 1/5 in profit. So what I will be going to do, I will be passing journal entry for capital and for goodwill separately, right? So I am passing for journal entry for capital brought in by the partner. Which entry I need to pass? Cash or bank account debit to which capital?
Past capital.
No, I need to write down name, na?
Sham capital.
Yes.
Sham capital.
Who is bringing Sham? So Sham's capital account. Where is Dhanushree today? Anyone idea?
No, sir.
Today is her birthday.
Birthday.
Do you know? Today is her birthday. So she might be celebrating her birthday.
How sir you know?
I came to know from our team member because they are having their number, no? Number and details, date of birth. They are having your date of birth details. They are having your phone numbers, right? So they told me to wish her if she joined the sessions, but she didn't join today.
They have put a message in the group to join the session, sir.
What?
They have already put a message in the group, sir, to join the session.
Oh yes, but she didn't join. So there's possibility that she's enjoying her birthday, right, Sadhna?
Yes, sir. We seem celebrate.
Yes. So Mumbai is out of the IPL, Sadhna.
Yes, sir. Sir, that boy is laughing, sir.
Huh?
That boy is laughing, sir.
Shivarish is laughing because he is enjoying Chennai Super Kings in final.
Yes, sir. They are fully cheating, sir. Mumbai
Who?
Indians.
Who?
No, sir.
It's wrong. It's wrong. They are not cheating.
CSK is only cheating, sir. Ah,
Yes. CSK banned for 2 years also for
yes, sir.
cheating.
But CSK is very well playing, sir.
It's okay, but who is cheater? Yes, Sadhna, who is cheater?
CSK,
Sir, have you seen the finals in 2019?
Yes, I have seen.
It's a no ball, Dhoni not out, toss.
No, it's not correct. Actually, it's not correct. Okay.
Ask anyone, sir.
Yes. So Shivarish, you are only one who is supporting Chennai Super Kings, and we are in majority, Sadhna, right? Parsati, are you there? Which team you are supporting, Parsati?
Achadi is my friend, so he will support us.
CSK only.
CSK.
Okay, he is your friend.
Yes,
Nice.
sir.
So there is a tie between us. Two CSK to Mumbai.
Yes, sir.
Okay, no issues. So we pass general entry, cash or bank account debit. So you are going to see today's match. Are you going to see Shivarish Parsati?
Sir,
Because of rain, match is postponed today, now.
Yes, sir.
yes, sir.
Okay, so Shivarish and Parsati is going to watch that match, right?
No, sir. Just to
No?
study.
Oh, nice. Parsati is saying I'm sir checking in my no much interest. Okay.
He is supporting for me, sir, Pathasari.
You are supporting for you. Oh, nice. Okay. So we pass one first journal entry that is capital of rupees 25,000 brought in by Sham. So we pass journal entry cash or bank account debit to Sham's capital account. So I will be writing journal entry narration here being capital brought in, right? You can write down simple narration, no issues in that. Okay, so which goodwill adjustment we have to do? Sadhna, Shivarish, Parsati. Goodwill amount brought in by the partner. Yes, which entry we have to pass for goodwill amount brought in by the partner? Tell me. We have already done this adjustment. Yes, please.
Sir,
Yes, absolutely right. Cash bank account we have to debit, and which account we have to credit?
partners, other partners.
Old partners
partners.
in their sacrifice ratio, right, Sadhna? So we have to pass journal entry cash or bank account debit.
Debate.
Cash or bank account debit 10,000 rupees to
Old partners.
old partner's capital account. And old partner name is Ram and Mohan, right? In their sacrifice ratio, we have to distribute this, right, Sadhna? You remember this adjustment now?
Yes.
To Ram capital, yes, Parthsarathy. To Mohan capital. Is there any problem with your mic, Parthsarathy? Or you still enjoying your holidays? You're out of station.
Sir,
Yes, Shivarish, where is?
He's a moon, sir. He is very shy type path, sir.
Okay. So he is in his home or he is roaming around, enjoying his holiday?
In moon.
In home
Day
only?
before yesterday only he came.
Okay, yes, sir, mic problem. He's saying the mic problem is there.
Lie, sir, lie. Telling lie.
Telling? Oh, okay,
Lie,
you're
lie.
saying lying. Parthsarathy, what your friend is saying here. You're lying. Is it correct?
Sir, we used to talk video call in
Oh.
our laptops, but
You are revealing his secrets.
Nice
So he's got
friendship, sir.
nice friendship.
sir, I am thinking about his future.
Oh my god. He is thinking about his future, Sadhna.
Yes, sir.
He is good friend.
That too,
Sir.
sir. Right, sir.
Nice, nice. Shall I move further now?
Yes.
Hi, sir.
Okay. So assets are revalued as under. Now tell me, it's a profit loss. Tell me. Building value is 25,000. What was the previous value of building?
18,000.
Previous value of building were 18,000. Today's value is 25,000.
25,000.
So it can increase or decrease?
Increase.
Increase by
7,000.
7,000. So it's a profit for me or loss for me?
Gain.
Yes, it is a gain for me. And where do I need to record?
Credit side.
Credit. Credit.
Credit side of revaluation account. Simple. I will be writing credit side revaluation account. Okay, sir. Sure. But when I'm preparing balance sheet after admission of a partner, building I need to record at what value? At 18,000, at 25,000, or at 7,000?
7,000.
In balance sheet I'm talking, huh? Parthsarathy, Shivarish, Sadhana.
Sir.
In balance sheet, after admission of a partner, I need to prepare balance sheet as well, right? So I'm asking you, at what price I need to write down building value in balance sheet? 18,000,
25.
18,000,
20.
25,000, or 7,000?
25,000.
But obviously, sir, 25,000 because current market value of that building on the occasion of admission of a partner is 25,000 rupees, right? So I need to write it down as a building value 25,000 rupees, right? Understood? Okay. So I need to pass journal entry for the same. Which entry I need to pass? So revaluation account I need to credit, right? And building account I need to debit. So I will be passing journal entry building account debit to revaluation account, right? 7,000 rupees, 7,000 rupees. Okay, done. After that, what next, sir? So next is your plant and machinery. So what was the previous value of plant and machinery? 15,000, sir, right? And today's value is 12,000. So value of plant and machinery get decrease or increase here?
Decrease.
The value of plant and machinery get decrease here by how much?
3,000.
By 3,000 rupees. It's a gain or loss?
Loss.
Loss.
It's loss. And loss
Debit
we have to
revaluation.
record on the debit side of revaluation account. Absolutely correct. My question to you, at what price I will be going to record down plant and machinery in book in balance sheet?
12,000.
Yes, 12,000. New value. Absolutely correct. Yes, part sir. Absolutely correct. So which entry I need to pass?
Revaluation account.
Absolutely correct. Revaluation account debit to
Plant and machinery.
machinery. Yes. Decrease by how much?
3,000.
3,000.
Decrease by 3,000 rupees. Correct. 3,000 rupees. Okay, fine. Next, sir. Next is inventory. So today's inventory value is 12,000 rupees. What was the previous value? 12,000. So is there any change in the inventory?
No, sir.
No, sir. There is no increase. There is no decrease. So I am not going to pass any journal entry, right? And in balance sheet also, inventory will be reflected at 12,000 only. Okay. So trade receivable is 9,500 today. What was the previous value of trade? Okay, 9,500 and previous value was 70,000. Let me check once again. Sorry. Okay. See, this trade receivable is not 70,000. It's wrongly written here. It's a 10,000. Right? It's a 10,000. Trade receivable amount as per the old balance sheet is 10,000. As per the new balance sheet, as per the current market value of trade receivable is 9,500 rupees. Right? So tell me, it's increase or decrease?
Decrease.
Decrease by?
500.
Decrease by 500. So again, it's a loss.
Yes.
Loss we have to write on the debit side of revaluation account. So we are going to pass journal entry.
Revaluation.
Debit.
Revaluation account debit to trade receivable.
Trade receivable.
Yes, 500 rupees, 500 rupees. Okay, sir. Okay, so we're done with this adjustment as well. Adjustment number 3. Now I need to read adjustment number 4. It was found that there was a liability of 1,500 for a goods received but not recorded in the book. So what does it mean? It means they are clearly saying you have purchased 1,500 rupees of goods, right? But you haven't recorded the same in the books of accounts, right? So 1,500 rupees you have not recorded. It was found that there was a liability for 1,500 rupees for goods received but not recorded in the books. So that 1,500 rupees of a liability, so we have to record today. So it means if I record 1,500 rupees today, overall liability will get increased or not, right? My overall liability will get increased. I will be writing what? I will be writing that creditors. Unrecorded liability for goods means what? You have purchased goods on a credit basis, right? Sadhana, Shivarish, Parcharthi. And you haven't paid 1,500 so far and you haven't recorded as well. So I will be recording these creditors today, right? I will be recording new creditors today. So these creditors I need to record, this liability will get increased. So my question to you, if liability, I'm recording new liability, but obviously, so overall liability will get increased by 1,500. So it's a gain for us or loss for us? Yes, Shivarish, Parthsati, Sadhana. Gain for us or loss for us?
So repeat it.
Yes. See what I'm saying, it was found that there was 1,500 for a goods received but not recorded in the books. What does it mean? You have received goods, Sadhana. When you will be receiving goods? When you purchase goods, right? Right? When you purchase goods, it means you have received the goods. So they are saying there is a liability. When will be their liability? When you haven't paid the amount, right? Right? So it means you have purchased 1,500 rupees of goods, Sadhana, and you haven't paid amount so far, right? And that is a liability. And they forget to record the same, right? But not record the same. It means I'm going to record that 1,500 rupees I am supposed to pay towards some person. Yes or no? So it means
Yes,
my overall liability will get increased by 1,500. So if my liability get increased by 1,500 rupees, it's a gain for me or a loss for me? Loss, right, Sadhana? Yes. So I will be considering these as a creditors, right? Because I have purchased goods on a credit basis only. That's why if I paid amount on the spot, then it is not liability. Sadhana, Shivarish, Parthsarthi. I have purchased goods on a credit basis, that then only it's a liability. So I will be passing journal entry for unrecorded liability. It's a loss for me. I will be debiting revaluation account. Simple. I will be debiting revaluation account and I will be crediting creditors account. So revaluation account debit.
Sir,
One, yes, please.
sir, why we are doing revaluation?
It's a loss now. See, whenever your liability get increased, it's a loss or not. That can be a old liability or you are recording new liability. It doesn't matter, no. See, previously liability was 0. Now you are saying liability is 1,500. It means your liability get increased by 1,500, no?
Oh, sir, they forget to record.
Yes, they forget to record, and today we are recording, right?
Okay.
That's why it's a loss. Revaluation account debit to creditors account. I can name it as creditors account, right? So if I'm recording new liability today, creditors, so but obviously, sir, after admission of a partner, when I supposed to prepare balance sheet, I supposed to record down that creditors also here. Unrecorded liability here 1,500 when I prepare a balance sheet, right? Sadhna, Pasarthi, Shivarish. See, they are asked me to prepare balance sheet as well, no? So when I'm preparing balance sheet, I will be writing this 1,500 on the balance sheet liability side or not. They forget to record previously. I am recording today. I have recorded through the revaluation account. Revaluation account debit to creditors account. So it means that creditor also I need to reflect on the balance sheet liability side. Yes or no? Getting this, Sadhna, Pasarthi, Shivarish?
Yes, sir.
Okay, good. So yes, we done all the adjustments. So what I need to do now? Sir, I supposed to pass last entry as well. Which one, sir? I need to find out revaluation profit and loss, and for that I need to prepare revaluation account now in roughly. So even they have not asked me to prepare revaluation account, I need to pass it. I need to prepare it. The only reason is I need to find out revaluation profit or loss there. So I'm preparing revaluation account here. So please help me in posting this. See, you can prepare revaluation account roughly because they have not asked you to prepare account, right? But for passing that last entry, so revaluation account preparation is important for me. Then only I can find out now there is a profit or loss, right? So I can prepare this in rough. No issues in that. Okay, so I will be checking my journal entries. Wherever I will be finding revaluation account, I will be posting that into the account, right? So in the first entry, there is no revaluation, right? Cash bank charm. In the second entry, sir, there is no revaluation. Okay, sir. In the third entry, yes, sir, there is a revaluation account get created for rupees 7,000, right? Right, Sadhna? So I need to write down here buy building. How much? 7,000 rupees. Revaluation account debit here 3,000 rupees on the debit side to plant and machinery 3,000 rupees. Revaluation account debit here 500 rupees to trade receivable. How much? 500 rupees.
500.
Then revaluation account debit to creditors account. So we have to debit revaluation account here to creditors account 1,500 rupees. Understood? Okay. So finally I need to close down this revaluation account. Tell me which side is more? Yes, 7,000 here. 7,000 has to be here. 3,000 plus 4,000 plus 5,000, not total. So balance is 2,000 only.
Yeah, sir.
2,000 is balance, and this 2,000 rupees I need to transfer towards capital account of old partners in their old ratio, right? So what is old partners? Ram and Mohan, and their old ratio is 3:2. Ram and Mohan. So I will be writing here to Ram's capital and to Mohan's capital. So amount is 2,000 rupees in the ratio of 3:2. Tell me. 1,200 and 800, I guess. Right? 1,200 rupees and 800 rupees is the answer. So for that I need to pass journal entry also. Tell me which journal entry I need to pass for these. You get this balance on the debit side of revaluation now.
Revaluation.
Correct. Revaluation account debit to Ram's capital to Mohan's capital. Yes, absolutely correct. So seventh entry is revaluation account debit to Ram capital and to Mohan capital. Okay, so 2,000 rupees here, 1,200 rupees here, 800 rupees here. Okay, sir. So what left now? Sir, I need to prepare balance sheet as well, right? But before preparation of balance sheet, I need to find out what is the current capital of the partners now. And for that, I need to prepare capital account also in rough. So I am preparing capital account also. Please help me in preparation of capital account. capital account. And now when you are preparing capital account now, please remember you have to prepare column for all the partners, including that new partner, Ram, Mohan and Sham. Right? Ram, Mohan, Sham. Ram, Mohan, Sham. Right? Okay. So first of all, I need to write down their capital balances, which is given here. Ram capital, Mohan capital, 20,000 and 25,000. On the credit side, I will be going to write down by balance brought down. By balance brought down. Ram 20,000 rupees and Mohan 25,000. So, and there is nothing for Sham at present, right? Because he is the new partner. Okay. So after that, we already checked when we started a question. At that time, we checked whether there is any reserves and surplus, whether there is any loss, nothing, sir, right? So I can straight away look into the journal entry. Wherever I will be finding capital account, I will be recording that, right? So in the first entry, there is a capital, sir. Sham capital account gets created, right? So I need to write down on the credit side of Sham capital by cash or bank. By cash or bank account. How much he contributed? For capital, 25,000, right? Okay, so 25,000 rupees I need to write down here. 25,000 rupees. Okay. So now next entry. So in the next entry there is also capital of Ram and Mohan, no? Cash bank account debit to Ram capital and Mohan capital, right? So I need to write it down on the credit side of Ram and Mohan, right? By cash bank account 5,000, 5,000, right? So I'm writing here by cash or bank account in the column of Ram 5,000 rupees, in the column of Mohan 5,000 rupees, right? Okay, next sir, next. So in the first two entries only there is capital, no capital in third, fourth, fifth, sixth entry. 7 entries there is a capital, sir, right? Ram capital and Mohan capital we have to credit for 1,200 and 800 by revaluation account, right?
Yes, sir.
I'm writing here by revaluation account. So here 1,200 rupees, here 800 rupees, here dash. Finally, I need to close down this capital account. I will be getting balances, sir. Tell me. There is nothing on the debit side, so we have to do only total of the credit. 25,000 for Sham. Here also it will be 25,000. So 25,000 is the closing balance of Sham's capital. So I am writing here to balance carried down. This is a balancing figure, right? Okay. For Mohan, 25,000 plus 530, 30,800. Yes.
33, sir.
It's a 25 now. 25 plus 530, 30 plus 8. Right now?
Sir, I assumed as a 28.
Balance brought down is not 28. It's 25 only. Right? See, Mohan's capital is 25. I can write neatly. Then there is no doubt. 25,000. 25,000 plus 5,000, 30 plus 8, 30,800. So balance is 30,800 rupees. Okay, sir. For Ram, 20,000 plus 5, 25,000,
26,200.
Yes, absolutely correct. So balance here 26,200. Right, Sadhna, Parsati. Right? Okay, so whenever we are preparing balance sheet now, I need to write down these capital balances on the liability side, right? So balance sheet liability side, capital will be reflected 26,200, 30,800 and 25,000, right? Okay. Apart from that, sir, I will be writing building also in new balance sheet. At what price, sir? At 25,000, right? Because of adjustment. Plant and machinery at 12,000, sir. I'm writing plant and machinery at 12,000. Inventory at 12,000 also. Same value. Trade receivable 9,500 rupees, right? Okay, so what about bank balance? So at present, bank balance is 5,000 rupees. I'm writing here. Bank balance is provided 5,000 rupees. Now I need to check down my adjustments. So in the first adjustment, 25,000 rupees comes into the business. Cash bank account debit 25,000, right? So I am adding in this 5,000 rupees. I am adding 25,000. Yes or no? Okay. So in the second entry, again, 10,000 rupees comes into the business for that goodwill amount, right? So I need to debit. Debit means comes into the business. I need to add that 10,000 once again. So I'm adding 10,000 rupees once again. Okay, 5,000, 25,000, and 10,000. Okay, after that, uh, third entry, fourth entry, fifth entry, sixth entry, seven. No, sir, there is no any cash bank account here, right? Only this much. So I can get to know now. So what is closing cash and bank balance? Final cash and bank balance. Yes, tell me. 25 plus 5, 30, 30 plus 10, 40 now. So my bank balance is 40,000. Getting now how I calculated bank balance 40,000?
Sir, we are taking debit balances also.
Yeah, simple. Debit means cash comes into the business, no? There's no any cash goes out of the business, right? We haven't passed any journal entry where cash account gets created. If cash account gets created, I will be subtracting that, right, Sadhna? Cash
Yes,
bank
sir.
account debit means cash comes into the business, so that I need to add. And if cash goes out of the business, that is credit, right? So in my journal entry, there is no credit of cash. I have created cash bank account in my entry. No, sir. I have passed two journal entry. First entry cash bank account debit to Sham's capital account, and second entry cash bank account debit to Ram and Mohan's capital account. So in both the entries, cash comes into the business, right? Cash bank account debit means cash comes into the business, and whenever you credit cash bank account, it means cash goes out of the business, right? So simply in this whole question, there is no cash goes out of the business, only comes into the business, right? Hence 40,000 is the balance. Okay, sir. I have written it down. Sir, any adjustment regarding trade payable? Any adjustment regarding trade payable in this whole question, sir?
No, sir.
No, sir. There is no
No, sir.
adjustment. So trade payable will remain same, sir. 15,000 rupees. And we have to record new creditors 1,500. And what will be the capital of Ram, Mohan, and that Sham now? So that we just calculated in our capital account now. So that I need to write down. Ram capital, Mohan capital, and Sham capital.
Sham can.
Ram, Mohan, and
Sham.
Sham's capital that we calculated. So what was the amount? 26,200, 30,800, and 25,000. 26,200 for Ram, right? 26,200. Then 30,800, right? And then 25,000 rupees. See, I'm just showing you how to prepare balance sheet. There is a solution also. After that, then I will be showing you proper balance sheet. Have you understood these? This
Yes,
will
sir.
be the amounts in balance sheet. Now you can check here. So this is the balance sheet, right? 25,000 building, plant and machinery 12,000, inventory 12,000, 9,500 is your trade receivable, bank balance is 40,000, right? Trade payable 16,500 as it is. I need to check whether it's okay. They have considered that 1,500 rupees. See, 1,500 rupees a creditor now. Unrecorded liability we recorded now. I'm talking about this 1,500 rupees of unrecorded liability, right? So creditor is a part of trade payable only, right? So instead of recording it separately, you can add this 1,500 rupees in this 15,000, right? So if you add that 1,500 rupees in 15,000, that is a trade payable. So basically trade payable is nothing but your creditor now. So there is no need to prepare, there is no need to write down separately that 1,500 rupees, right? So here 15,000 rupees plus 1,500 rupees, you get to know answer 16,500. And we get this answer now for Ram, Mohan and Shams, 26,200, 30,800 and 25,000, right? So once you tally this balance sheet, you will be getting balance amount 98,500, 98,500. So your balance sheet will get tally at rupees 98,500. Understood this, Shivarish, Parthsarthi, Sadhana? Any doubt, any questions? You can ask me.
No doubt.
Yes, Sadhana?
No doubt, sir.
Okay, good. See this illustration number 2. Read this illustration carefully, right? You are required to make necessary adjustments in the capital account of the partners and show the balance sheet of the new firm. they have asked me only to prepare balance sheet. But the thing is, without journal entry or without preparation of revaluation account or partner's capital account, I can say prepare balance sheet, right? So what we have to do here, okay, see what we supposed to do here. You can pass journal entry, you can have revaluation account, you can have capital account, right? And then finally you can prepare balance sheet, right? So what I'm expecting from you, read this question nicely, right? Read it carefully. And if you are getting things that, sir, we have to record this here only and this is the journal entry, if you're confirmed, then you can solve that, right? I will be discussing in 5 to 7 minutes. Getting Sadhana, Shivarish? Yes, Parthsarthi. So read this question, and if you're getting it, you know the answer, then you can start passing the journal entry. You can post into the revaluation account, partners capital account, or balance sheet, right? See, when you're solving this now, first of all, on first page, you have to prepare revaluation account and your capital account on one page. Draw it straight away, right? Straight away you can draw. You can draw it roughly. A revaluation account, capital account on first page, you can do it. On the next page, you can draw space for a balance sheet, right? First page, second page, and on third page, you can pass journal entry wherever required, right? So on the first page, there is revaluation account, capital account, right? Draw it. Then on the second page, have a space for a balance sheet, and in third page, you can have a journal entries. Getting Shivarish, Sadhana? Question is visible to you?
Yes, sir.
Entire question is visible to you? Check this. Able to see the question now? Shivarish?
Yes, sir.
Okay. So read this question carefully and we'll discuss in 5 to 7 minutes. Okay, shall I discuss now? Shivarish, Sadhna.
Chapter 1.
Okay. Yes. See, I'm discussing this. Sadhana, Patsati, Shivarish. Okay. A and B are a partner sharing the profits and losses in the ratio of 3:2, right? And their balance sheet as on 31st of March 2022 is provided. So what we are going to do first of all, sir, so this capital A of A and B, we are going to write down on the capital account trade side, right? By balance brought down. By balance brought down capital account trade side. 2 lakh and 1 lakh. Okay. Sir, on the balance sheet asset side, there is no profit and loss account balance, and even on the liability side also, there is no profit and loss account. There is no reserves and surplus. Okay. On 1st of April 2022, they admit C on the following terms. Sir. What are those terms? C will bring 50,000 as capital and 10,000 for goodwill for 1/5 share. Okay. So first of all, I need to pass journal entry for capital brought in by C. So I will be passing the journal entry. Just check this whether you correct or not. Cash or a bank account debit to C's capital account. Right? I need to pass this journal entry and the amount is 50,000 rupees and 50,000 rupees. Then he bring 10,000 for goodwill. Now I need to check whether a new profit sharing ratio is given in this entire question or not. Sir, if I see here, a new profit sharing ratio is not given, right? Right, Sadhna, Shivarish? New profit sharing ratio is not given, right? So whenever new profit sharing ratio is not given, so we know that old profit sharing ratio becomes their sacrifice ratio. So this old ratio is equal to their sacrifice ratio. Yes or no? Sadhana, Shivarish, right? So the 10,000 rupees of goodwill brought in by that partner, I will be passing the journal entry. Cash bank account debit to A's capital to B's capital. A and B now in the ratio of 3:2. 6,000 and 4,000, right, Sadhana?
Yes.
Okay. So I done with first adjustment. Provision for doubtful debt is to be made on trade receivable at 2%. So what does it mean? It means simple that from trade receivable of rupees 25,000, we are going to subtract 2% of amount, right? So what is 2% of 25,000?
500.
500. It means trade receivable will come down by
500.
500. So it's a loss for me because asset come down. So I will be debiting revaluation account for the same, right? And when I'm writing, when I'm going to write down on or I'm going to prepare balance sheet, so trade receivable will be reflected at rupees 24,500. 25,000 minus 500, na? So trade receivable amount will be 24,000 entry for this year. Entry number 3, it's a loss. Revaluation account debit to trade receivable, and amount is 500 rupees. 500 rupees. Yes, absolutely correct. Okay, so next adjustment, please. Yes. Inventory to be written down by 10%. Written down means we have to reduce the value of inventory by 10%. So at present, value of inventory is how much?
30,000.
30,000. So 10% of 30,000 is nothing but 3,000. So we have to subtract value of inventory by 3,000. So it's a loss. We have to debit revaluation account, right? And when I'm writing new balance sheet, inventory will be reflected at rupees 27,000 because we subtracted 3,000 rupees from it, right? So the next entry is revaluation account debit to inventory account, and amount is 3,000 rupees. 3,000 rupees. Understood? Okay. So next, freehold premises to be revalued at rupees 2,40,000. Revalued at means what, sir? So revalued at means they are directly saying you the new value of premises, right? Freehold premises revalued at 2,40,000. So 2,40,000 is new value. So what was the old value? Old value were 2 lakh, right? See here. So it means value of freehold premises increased by how much? Increased by 40,000. And when you are preparing balance sheet, so freehold premises will be reflected at 2,40,000. Okay, sir. So freehold premises increased by 40,000. It's a profit for us. We have to create revaluation account. Okay. So value of plant is today how much? 35,000. And value of plant here is 40,000. It means value of plant decrease here by 5,000. Right? Decrease by 5,000. It's a loss, sir. We have to debit revaluation account for the same. And when you are preparing balance sheet, the value of plant will be reflected at rupees 35,000. Then, so next is your furniture. Furniture is 25,000. Today's value is 25,000. Old value at 20,000. It means furniture increased by 5,000. And when you prepare new balance sheet, furniture will be at rupees 25,000. Okay. So office equipment is 27,500. Right? Previous value of equipment were 25,000. It means value can increase once again by how much? 2,500. So 2,500 if you added, so new value will be 27,500. Okay. So wherever value of asset get increased, so I can combine that and I can pass only one generality for that. Right? See, freehold premises increased by 40,000. Furniture increased by rupees 3,000. Equipment increased by rupees 2,500, right? So this I can combine these three and I can pass journal entry. Whenever it is increased, we have to credit revaluation account. So I'm passing combined journal entry. You can pass separate also, no issues in that, right? So if I pass combined journal entry, entry will be freehold premises account debit for 40,000 rupees. Then plant 35,000. So plant is reduced basically. Furniture get increased by 3,000, no? Right? 3,000 or 5,000. Furniture. Furniture 20,000 and now it's at 25,000. 5,000, not 3,000, 5,000. Furniture get increased by 5,000 rupees. So I can say furniture account debit 5,000 rupees. And equipment, office equipment account debit 2,500 rupees, right? And total I can write down on the revaluation account credit side. Revaluation account credit 40 plus 5, 45, 45 plus 2, 47,500. 47,500. And I need to write down separate entry for this plant, which is reduced by 5,000, right? So I'm writing separate entry for that. Revaluation account debit to plant account. And amount is 5,000 rupees, 5,000 rupees. Right? Okay, so we're done with both adjustment. Now, so partners agreed that the value of the asset and liability remain the same and as such there should not be any change in the book value of the as a result of the above mentioned adjustments. So what is meaning of this line? See, this adjustment is very much important. Partners agreed that the values of the assets and liabilities remain the same, and as such there should not be any change in their book values as a result of the above mentioned adjustments. Sir, they are saying even if you did all the adjustments of the above, there will be no change in the book value. So indirectly they are saying, or directly they are saying, sir, when you are preparing balance sheet now, prepare a balance sheet at old value only, right? At old value only. So why I'm saying this? Because of these adjustments. See, partners agreed that value of the asset and liability remain same, right? And as such, there should not be any change in the book values as a result of the above mentioned adjustment. So whatever adjustment we have mentioned above, sir, so that adjustment will not have impact on what? On the book value of the asset and liability, right? So what is the purpose then? Sir, purpose is for preparation of revaluation account, right? For that, yes, sir, we have to consider this increase decrease in the value of assets. But when we comes to preparation of the balance sheet, they are saying there is no need to change the values of the assets and liabilities, right? You are required to make necessary adjustment in the capital account of the partner and show the balance sheet of the new firm. Getting? So see, you understood so far which entries we have, entries that we have passed so far, right? There is no doubt in that, right? Sadhana, Shivarish, is there any doubt in the general entry that we passed so far?
No, sir.
Sadhana, Shivarish?
No, sir.
Okay. So what will be the impact of the adjustment number 5? I will be showing you here. See, this question basically, the last adjustment number 5 is not there in your 12th CBSE syllabus, right? It's there in CA Foundation, right? So think this question from CA Foundation point of view, that we have to write down the value of assets and liabilities at book value. Then what we have to do, sir, right, in that case? So I'm showing you. See, we have prepared one revaluation account, and name of that revaluation is memorandum revaluation account. So only name of the account is changed, everything will remain same, right? See, premises value get increased by how much here? Premises value get increased by 40,000, yes or no?
Yes.
Right. So see here, premises value get increased by 40,000. It's a profit, gain for us. We have record on the credit side. Furniture increased by 5,000, right? Then office equipment increased by 2,500. Trade receivable decreased by 500. Inventory decreased by 3,000, right? Plant decreased by 5,000, right? So everything is as it is only, right? Only the name is memorandum revaluation account. I will be let you know what is the exact meaning of that. Okay. So after that, what I need to do? See, if I close this down, so I will be getting A's capital account and B's capital account balance 23,400 and 15,600, right? Right? After closing this revaluation account, I will be getting balances for A capital and B capital. So basically, I will be getting some balance, and that balance I need to distribute between A and B as per their old profit sharing ratio, that is 3:2, right? Just like we do for revaluation account. Same we have to do here. Okay. Now, see, after doing this, what we have to do? After doing this, we have to write down these transactions once again. Now on the opposite side, means previously you have recorded whatever you have recorded on the credit side, that you are going to write down on the debit side, and whatever you have written on the debit side, you will be going to write down on the credit side. See here, 500, 3,000, 5,000, right? Same. See here, 40,000, 5,000, 2,500, right? So you have to write it down once again on opposite side. Once you write it down, now you have to close down this account once again, and whatever balance you are getting, that you have to distribute between A, B, and C. That is between all the partners now, as per their new profit sharing ratio. Getting? Once again, I am repeating, sir, I am doing this only because of the adjustment number 5. So what is adjustment number 5? And I am once again telling you, this adjustment of this question is from CA foundation point of view, not from your CBSE point of view. There is no such adjustment in CBSE syllabus, right? So in adjustment number 5, they are clearly mentioned that we are going to write down value of asset and liability in the balance sheet at book value only. And there will be no impact of change in these assets and change in this liability, increase, decrease in asset and liability on the balance sheet. They have mentioned here, right? If such a thing is there, we have to prepare memorandum revaluation account, not normal revaluation account. We have to prepare we have to prepare memorandum revaluation account. So what we have to do first of all, so what we used to record in revaluation account, so that only we have to first of all record here, right? After recording it, whatever balance you are getting, you have to transfer that balance. You have to distribute that balance among old partners as per their old profit sharing ratio. So we did this here, right? And secondly, what we have to do now? And secondly, so in second part, same thing we have to write down opposite side. So credit will be on debit and debit will be on credit, right? And after doing this second part, you will be getting balance, but obviously on the credit side. And that balance, see, whatever balance amount you will be getting here, you have to distribute among all the partners, between all partners as per their new profit sharing ratio. Understood this, Sadhna, Shivarish? Right? Now the thing is, so new profit sharing ratio is not given here now. So we have to calculate that. How to calculate new profit sharing ratio? Tell me. Old partners, old profit sharing ratio is available. Old PSR is available, that is 3:2. And new partner profit sharing ratio is available 1/5. New partner profit sharing ratio is available 1/5. So we have to calculate, sir, new ratio. How to calculate new ratio? Tell me. Sir, new
3/5 minus 1/5
share is equal to old share minus share sacrifice. So share sacrifice we know now, 3/5 and 2/5 only. Right now, Shivari, Sadhna.
Yes, sir.
Right. So I can put this into the formula. For A, old share was 3/5, right? Minus, yes, share sacrifice is 1/, we did that, no? Okay. Fine. I can go with these steps, and then you will get clarity. So information provided. This is case number D, if you remember. New profit sharing ratio of new partner given as 1/5, na? Please check once again, it's 1/5 or not. Yes, 1/5. And old share is 3:2. Case D. Old share is 3:2. Okay. So step number 1, we have to calculate share sacrifice. So how to calculate share sacrifice? So share sacrifice is equal to new partner share multiplied by old share, if you remember. Remember this, Sadhna, Shivarish? Case number D. for calculation of new PSR and sacrifice ratio? Remember these? New partner share multiplied by old share. So for A, so new partner share is how much?
1/5.
1/5. Multiply by old share is how much? 3:2. So 3/5. For B, 1/5 multiplied by 2/5. So share sacrifice will be 3/25 and 2/20. So ratio we already know. Ratio we know about. Ratio is 3:2. Right? Numerator. That is not issue. Okay. Now I can put now into the formula of new share. New share is equal to old share
Old share
minus
share sacrifice.
share sacrifice. Yes. So for A, old share were, yes, old share were 3/5 minus 3/25. So if I do by LCM, 15 minus 3, 12. 12/25. For B, 2/5 minus 2/25. So if I do by LCM, 8/25. Right? And for C, 1/5. So sir, we know denominator has to be equal. Multiply by 5/5. So 5/25. So my new ratio is 12:8:5. Okay. So we know 12:8:5 is a new ratio. So in that new ratio, what I need to do? I need to distribute this amount. 12:8:5. What is the balance exactly? Can you tell me? 20. See, I can do the total of these. I can get balance. 20 plus 10, 30, 35, 39,000, I guess.
Yes, sir.
Right? So 39,000 rupees is the balance that you will be getting here, and that we have to distribute in the ratio of 12:8:5. New PSR, right? 12:8:5. You will be getting this much of amount. Okay, so what I need to do now? Sir, after doing this, we have to focus now on partner's capital account. See, partner's capital opening balance is given 2 lakh, 1 lakh, right? Then this C partner brings amount into the business for capital, right?
Yes, sir.
So 60,000 rupees is there. Okay, I need to check. Okay, so they have solved differently. I need to, first of all, I need to write down 50,000 and then 10,000 separately. But they have did this in different way. But instead of doing this, I will be writing like this. Bang in the column of C, how much? 50,000 rupees. And again, by bank in the column of A and B, 6,000 rupees and 4,000 rupees. I'm not following their answer. Okay. Forget about this. Okay. After that, the thing is left. Only thing is the balances that we find out here. See, this balance and this balance that I need to write down in capital account. So this for A and B, I will be writing on the credit side 23,400 and 15,600. 23,400 and 15,600. Right? And the balances that you get here on the credit side, that will be reflected on the debit side. See, 18,720, 12,480 and 7,800. Right? Once you did this, now you have to close down partner's capital account. You will be getting balances, which is adjusted balances. So why we did this? So we did this only because of that adjustment number 5, which telling us that we are not going to record value of assets and liabilities at current value. Right? At revalued amount, they are not going to write it down. They are write it down and only in the old value. It means whatever decrease in or increase in decrease in the value of asset and liability is there, so that we have to adjust through partner's capital account, right? And that's why we did this. The reason behind doing this, doing that memorandum revaluation account, that is only reason that, sir, they have decided not to write down asset and liability at current market value, at revalued amount. They decided to write it down at book value, right? So whatever increase decrease in the value of asset and liability is there, so that we have to adjust through the partner's capital account, right? And that we did here, and we get to know balance of these two balance carried down: 2,10,680, 1,07,000 120, and 42,200 rupees, right? And then I can write it down, that balance here, A, B, C, right? And rest of the things will remain same. Rest of the balances, these, and these will remain same. You can check. You can check from here. Rest of the balances are same or not, except bank balance, because 60,000 rupees comes into the business now, so that we have to add only, right? That we have to reflect at 70,000 only, right? Now, Sadhna. Apart from that, these assets will remain as it is. See, trade payable 50,000. Look into this balance sheet. Yes, 50,000, sir. Right? Because it is mentioned in the question. Freehold premises at 2 lakh, sir. See, 2 lakh. Then plant 40,000, furniture 20,000, 40,000, 20,000. Office equipment, sir. Office equipment 25,000. See, office equipment 25,000, right? Inventory, sir. Inventory 30,000. Inventory 30,000, sir. Right? Inventory 30,000. Trade receivable 25,000. Trade receivable 25,000. Right? So only exception is bank balance. So this is exception. Right? Bank balance, you have to write down current bank balance. So 50 opening bank balance were how much? 10,000, right? Then partner brought in 50,000 rupees of capital into the business. So 50,000 we have added, and then we added 10,000 rupees. So 10,000 rupees for goodwill. So total is 70,000. So that 70,000, that is current bank balance we have to write down. Apart from that, rest of the asset and rest of the liabilities we have to write it down at book value only, right? And this capital balance we find from capital account. We get this from capital account, right? And after closing this, you will be getting balance sheet tallied at rupees 4,10,000 and 4,10,000. Have you understood this, Sadhna, Shivarish? Why we did this? Why we prepared that memorandum revaluation account? Understood? Only because of this adjustment number 5. Getting, Shivarish? And as I said you, this question is of your CA foundation. You can consider this question as a CA foundation question. CA question, right? So that adjustment number 5 is not belongs to your CBSE. Understood this, Shivarish?
Yes, sir.
Okay. Now see this question number 3.
Sir, last question.
Last question. Probably last question for a day. You have to just see, they ask you to prepare evaluation account and partners capital account. Just go through this. Is it visible to you now? Bold question. See, I'm just showing you a balance sheet. I'm just showing you adjustments. This is the balance sheet. Forget about this at the present. Look into these adjustments. Read from here. She was admitted to the firm from the following conditions. Read this adjustment number 1, 2, 3, 4, 5. See whether you are getting it or not. Right? I'm discussing this in 2 minutes. Right? First of all, read this. Yes, done reading. Shall I discuss? Then you can solve this question as homework. Right, Shivari Sadhna?
Yes, sir.
Shall I discuss?
Yes, sir.
Okay. See, A and B are partnership firms sharing the profits and losses in the ratio of 3:2. The balance sheet of A and B as on 1st of January 2022 as follows. See, capital balances are given A and B. What they ask you to do? Revaluation account and partners capital account. Okay. So I will be writing this on the credit side of partners capital account. By balance brought down, right? Okay. So there is no reserves and surplus here. There is no loss here. Now, so adjustment number one. C is admitted for 1/6 share in the future profit and to introduce capital of rupees 25,000. Okay, he introduced capital of rupees 25,000. So you will be passing journal entry cash or bank account debit to C's capital account. That means if I prepare a capital account, I need to write it down on the credit side of C's column, 25,000 rupees, right? Okay, and my cash balance will get increased by rupees 25,000. So I am putting addition here, 25,000. New profit sharing ratio of ABC is 3:2:1 respectively. Okay, sir. So it is easy for me to calculate sacrifice ratio. I can calculate sacrifice ratio, new PS, old PSR minus new PSR by using that formula. Okay. C, third adjustment. C, unable to bring in cash for his share of goodwill, they decide to calculate goodwill on the basis of C's share in the profit and the capital contribute made by him to the firm. So what they are saying, C is unable to bring in cash his share of goodwill. They decided to calculate goodwill on the basis of C's share in the profit and capital contribution made by him to the firm. So we have to calculate goodwill and we have to pass journal entry accordingly because he is unable to bring goodwill into the partnership from business. So what we have to do, basically he contributed how much? He contributed capital of rupees 25,000, right? So what they are saying, based on what? Basis of C's share in the profit and capital contribution made by him to the firm. Okay, sir. I can read further, then I can understand. So by which method I need to value goodwill actually, right? But before that, I need to read further question. Furniture is to be written down by, okay, it's percentage of rupees 870. Let me check once. 870 only. Okay, furniture is 870. Okay. It's rupees 870. Furniture to be written down by rupees 870. Sir, we know this. If furniture written down by 870, it will be your loss, right? Revaluation account debit side we have to write down. Okay, inventory to be depreciated by 5%. We have to calculate 5% on inventory, sir. Inventory is 21,400 rupees. On this, we have to calculate 5%. Again, it's a written down. It's a loss revaluation account. We have to debit. Then we have to create provision for trade receivable 5% for a bad debt. 5% on bad debt, sir. So what we have to do? See, once again, a provision is required to trade receivable at 5% for bad debt. A provision would be also made for outstanding waste. That is different. So we have to, first of all, we have to create 5% for bad debt. So on which amount we have to create? So on 35,000. So 35,000 rupees multiplied by 5 upon 100. So what will be the amount? Yes. 35,000 multiplied by 5%. 750 days. Once again, I am solving. 35,000 rupees multiplied by 5 divided by 100, right? So answer is 500. 5 5 is 25. 1,750 rupees. Yes. So 1750 has to be what? 1750 is the amount that we have to subtract from trade receivable. Actually, already we subtracted how much? Already subtracted 200 now. So it means we have to subtract how much? Minus 200. We have to subtract only 1550 rupees more. Right? So you will be passing journal entry only for 1550. Not for entire 1750, right? So on 35,000 you have calculated what? You have calculated 5%. It comes 1750 rupees, but you have already subtracted 200. It means 1550 only we have to subtract now, right? So from these 34,800 I will be subtracting 1550 more, and whatever balance, that will be reflected in balance sheet, right? And so what about revaluation account? In revaluation account I need to consider this amount only. Revaluation account debit 1550 only. Understood? Then a provision would also be made for outstanding wages of rupees 1560. So what is meaning of outstanding wages? Outstanding wages means we are supposed to pay 1560 rupees as a wages, right? So outstanding wages are there. So outstanding wages is nothing but liability, right? So new liability you are recording here. 1560 rupees of outstanding wages are there. So liability will get increased by 1560. So whenever liability get increased by 1560 rupees, it's a loss for you. So you have to debit to the revaluation account. Then, so value of building having appreciated, be brought up to 29,200. Up to. So whenever it gives you up to, it's nothing but new value, right? Once again read. The value of building have appreciated, be brought up to. Brought up to means new value. So 29,200 is the new value. New value is given to me 29,200. What was the old value of building? So old value of building were 26,000. Now value is 29,200. So it means the value of building appreciated here. Value of building appreciated here by 3,200 rupees. Right? 3,200 rupees value of building appreciated. You have to write on the credit side of revaluation account. The value of investment is increased by rupees 450. So we have to increase value of building by 450. So if value of building get increased by 450, it's again a profit gain for you. So you have to write it down on the revaluation account credit side. Understood? Then it is found that the trade payables included a sum of rupees 1,400 which is not to be paid off. Not to be paid off means, so you are not going to pay 1,400 rupees, right? If you are not going to pay 1,400 rupees, then it's a gain for you. Yes, sir, 100% gain for you if you are not going to pay 1,400 rupees in future, right? So your liabilities get saved by that much, by 1,400 rupees, right? So it is found that the trade payable included a sum of rupees 1,400 which is not to be paid off. So it is nothing but gain for you. You are going to write it down on the revaluation account credit side. Understood these adjustments? So after doing these, you can prepare revaluation account. You can prepare partners capital account as well, that they ask you to prepare. Understood these? How to calculate sacrifice ratio, you know, right? Only thing left is how to calculate some goodwill, right? So it is nothing but hidden goodwill. If you remember what is meaning of hidden goodwill. See, once again, I am reading that line for goodwill. See this. C is unable to bring cash as his share of a goodwill. They decided to calculate goodwill on the basis of C's share in the profit and the capital contribution made by him to the firm. So he contributed how much, sir? 25,000 now. See goodwill calculation working out. Calculation of goodwill, sir. The C's contribution is 25,000, consists only 1/6 of capital. Therefore, total capital of the firm should be 25,000 multiplied by 6. So it comes 1,50,000. Now, from 1,50,000 rupees of capital, so this is nothing but capital needs to be, right? And what is actual capital, that I need to calculate? Capital needs to be, and what is actual capital, sir? So actual capital is nothing but addition of A's capital plus B's capital plus C's capital, right? So addition of everyone's capital. So 44,000, 36,000 and 25,000. So 44 and 36 is already available in the question, right? 44 and 36 is already available here. So that we have to consider as it is, and we have to add C's capital 25. So you get to know answer how much? So answer is total is 1,05,000 rupees, right? If you add these three together, so actual capital is 1,05,000 rupees, right? But needs to be 1,50,000. So difference is 45,000. So this difference is 45,000 is nothing but goodwill. And we solve these, we calculate goodwill by hidden goodwill method. If you remember this, we did this such a kind of adjustment, right? So 45,000 is goodwill, and this 45,000 is goodwill for firm. So, but we have to calculate goodwill of what? Goodwill of that new partner only. So 45,000 rupees multiply by 1/6. So what will be the answer for goodwill? Tell me. Yes, Sadhna, Shivarish. $45,000 is the value of goodwill per firm, but we have to calculate always goodwill for, am I audible? Goodwill for new partner, no? So 45,000 multiplied by 1/6. So answer is 7,500, right? And this 7,500 you will be going to distribute between A and B as per their sacrifice ratio. Which entry we have to pass for this when goodwill is not brought in by new partner? Tell me, Sadhna, Shivarish, which entry we have to pass when goodwill amount is not brought in by the new partner? Shivarish?
New partner's capital account debit.
Absolutely right. Absolutely right. C is capital account debit to sacrificing partner's capital account. A is capital account and B is capital account. So the 7,500 rupees we have to distribute between A and B as per their sacrifice ratio. So you have to calculate sacrifice ratio. New ratio is available in the question. You have to put into the formula and you can get to know what is sacrifice ratio. Understood these? Understood this hidden goodwill? Sadhna? Okay, so I'm putting this question as a homework. Please do this question. See, answer is also available here, but don't look into the answer first of all. Do it by your own, right? And then you can check with the answer whether your answer is correct or not. And even if you are facing any difficulty, you can ask me in the next session, right? Getting? Sadhna? Shivarish?
Yes.
Okay.